So everyone, thank you for joining us. I am Ariel Shaw, founder and president of Southern Crescent Women in Business. We are so excited to have the U.S. Small Business Administration on, along with SBDC and Ameris Bank, to talk about PPP Forgiveness. We wanted to go ahead and do this session just because we were getting a lot of feedback as it relates to either not understanding that if you received 150,000 or less that you did have to actually apply for forgiveness and it was not automatic. And we just wanted to make sure that we were providing you as much information as possible so that when those statements rolled around, everyone wasn't thrown off. So again, I am Ariel Shaw. Again, thank you, Jeffrey Patterson with the U.S. Small Business Administration, Ceasar with Ameris Bank, and Glenn Kruse, with Small Business Development Center. So again, I am Ariel Shaw, founder and president. We are Southern Crescent Women in Business. We have 3 active chapters in this area, which includes Clayton County and DeKalb County, Fayette County, and Henry County, which I consider the hub because that's where we started and that's where I'm located. We have created the first Women Business Center on the south side, and it is located in McDonough, Georgia, and it is available for use as well as services to women-owned businesses and women in business in what we call the Southern Crescent. So today we have Mr. Jeff Patterson with the SBA. Jeff has been an advocate for small businesses his entire career, which spans over 35 years. He's a mentor and coach for some of the most promising small businesses while directing Georgia State University's Small Business Development Center. He has intuitively seen the opportunity to help those entrepreneurs grow their economy and their communities. He is a lending specialist. I believe that's the correct term with the Small Business Administration. And so we're so excited to have him. I know you guys are familiar with Miss Terry, and Jeff was referred by her, so we're excited to have him today. We have Miss Ceasar with Ameris, and Keena is not a stranger to this area. Keena, I believe, sits on the board with the chamber, but she is the vice president and market manager at Ameris Bank, where she is entrusted to lead teams at multiple locations. With over 25 years in the banking industry, she has a passion for small businesses and loves working with business owners. Keena is also the co-chair for the Women in Banking Employee Resource Group at Ameris Bank. In that role, she is charged with assisting in the development and growth of women of Ameris Bank, as well as support opportunities for women that lead to advanced level leadership positions. And thank you, Keena, for joining us. And again, Mr. Glenn Kruse, Small Business Development Center. Mr. Kruse brings 40 years of management experience, including executive management in large corporations and startup companies. His areas of specialization are business and market development, program management, strategic account planning, and general management. He has worked in small businesses that focus on tower site leasing, Wi-Fi hotspots, corporate network management, and accounting software solutions. And again, that is the Small Business Development Center with the University of Georgia. And again, thank you for joining us. All right, guys, so I'm going to let Keena say a few words. We'll go down to Jeff and then Glenn, and then we'll go into the presentation.
Well, thank you. Good morning, everyone. Thanks, Ariel, for having me and the Southern Crescent Women in Business. Thank you all. And we appreciate all that you do for the women in the county. So I agree with you. This is the hub. It's where it started. And Henry County is a great place to do business. So I'm Keena Ceasar, market manager with Ameris Bank. And, we are a regional community bank. So if, you want to do business in person and that relationship is still important, we love the opportunity to court you and hopes to make the relationship official. We are a relationship-driven institution. So give us a call. We'll be happy to help.
Awesome. Jeff?
All right. Well, good morning, everyone, and thanks for having us. And such a pleasure to be with you and Southern Crescent. Just a little bit of a refresher on the Small Business Administration, or SBA. We're we just had our 68th birthday. So so we were established in, I don't know if you can get all those candles on the cake, right? So we were established in 53. And what I want you to know is our Administrator Guzman, is on the cabinet level policy making board, or the cabinet with the president. So she has the president's ear. She helps formulate policy for our small businesses, and we're very appreciative of that. The Small Business Administration's mission, of course, is to help your business wherever you are in your life cycle, whether it be starting your business, growing your business, or as we now say in the COVID environment and all the disasters we have, recover your business. So we have offices nationwide, and I do reside here in the Atlanta market. We take care of all of Georgia and all our businesses here in the state and our lenders, and that's my role. And I'm just thankful to be here. We're going to talk some PPP stuff and other good stuff for you. Hopefully it'll be beneficial.
All right. Thank you. Glenn?
Yeah, my name is Glenn Kruse. I'm the area director for the University of Georgia Small Business Development Center located in Gwinnett. We're actually at a UGA campus location in Gwinnett. The UGA SBDC is partially funded by SBA, so we always want to help Jeff and his colleagues wherever we can. And then we're also partially funded by the University System of Georgia. So we're a combination of your federal tax dollars and your state tax dollars, fully funding our existence. We have 18 locations around the state. We just opened our 18th one. We're pretty excited about it, Morehouse College. So that's another location in the metro area. And we do have an office down in Clayton State where my colleague and friend Kim Knight is located. We will provide services to you, direct consulting services to you at no cost to you, because our funding is already in place. We've got great research tools. We do continuing education classes where we charge some modest fees for that. But check us out at georgiasbdc.org. We're a .org, not a .com. And you can find an office anywhere, generally where you're located. So you can find an office in the metro area within a few minutes drive of where you happen to live. I'm excited to be here with Jeff. Jeff and I, although we're not part of SBA, it seems like we're part of the same team. And we have been since since the CARES Act came into being, and we've been working on disaster relief funds. So I'm excited to be here with you today.
All right. Thank you. All right. So SBA disaster relief funding, what's left? And let's talk about PPP. All right, Glenn, I'm going to let you take over.
I'm going to start. I'm going to kick us off. Let me start. And then Glenn, by the way, Glenn, he didn't mention this, but his services are pretty much free. There are training resources that maybe there's a nominal fee, but they're smart people over there, and you need to check them out. And one of the things Glenn's the only person I know close by that has read every piece of legislation. So he's well versed in this stuff, but I'm going to kick it off. Let's talk about PPP just a minute. Let me give you some numbers. So nationwide, I mentioned our agencies, back in 1953, we started. Who thought that, and it's only about 6,000 staff. So we were given the Herculean task to get this money deployed. And let me give you some numbers on that. Nationwide, there's about $800 billion in PPP money out. Idle loans are about 237 billion. So that's $1 trillion of economic aid that was put out in the past 18 months, going on 24 months. And hopefully, who thought we'd be still talking about, this COVID in here about 2 years later, but it was money well needed. In Georgia, let me tell you some numbers. We were about 5th in the nation as far as getting numbers out, or dollars out, 15 billion in Georgia. The idle product was about 9 billion. So that's 5th and 4th nationwide. So we've done a good job, I think. Not perfect. There's been some bumps along the way, but we've gotten some money out. Now we're going to talk about forgiveness. We're about halfway through. 11 million loans have been put out, and about half of those have applied for forgiveness. So obviously that's why we want to talk to you about that. And about $540 billion has been forgiven already. That's the mission. That's what we want to do. We want to forgive these loans. So just a refresher real quick. The PPP program, or Paycheck Protection Program, came about March the 25th, and we affectionately call it the CARES Act. The SBA was given the task to, again, help deploy the money, and we did that through our lending partners. So, and again, the enticement for them is there was 100% guarantee behind the PPP product. So there's no risk for them. They knew, the bankers know their customers and could deploy the money in fast order. So that's why we did that. There was this new thing called forgiveness in the legislation. If you spent the money a certain way on payroll, rent, things of that nature, then we, the SBA, through the lender, would forgive your debt. That's one of the other enticements here. And the initial product was a 2-year loan at 1%. Payments were deferred for 6 months. We do have some other deferments coming up that's probably going to get your attention. But so that's the CARES Act. Next slide. So then the Flexibility Act came along in June, which really, based on feedback and modifications in the legislation and things of that nature, extended the covered period from 8 weeks to 24 weeks. Now that covered period is the time that you had to spend the money on those specific things. So it gave you a little bit more time. Who knew, again, how long we would be in this environment? So it kicked the covered period to 24 weeks, and it extended the loan term up to 5 years. Now, it permitted the lender, if you as the borrower said, hey, I just want to go in and I'm okay with the 2 years, you could leave it alone. But if you wanted to go to the 5 years, you'd have to talk to your lender about that. But the other thing that's important is it extended the deferral period to over 10 months past your covered period, but it reduced the requirements to spend on the payroll, which was the mission of the program, was to keep people employed, right? So it lowered the minimum requirement for 60% of the money as opposed to 75% of the money to be spent on payroll. So let's see, next slide. Yeah, that was just a quick refresher to kind of tell you where we've come from. Glenn is going to talk to you about the forgiveness, the direct forgiveness piece. And Glenn, remind everybody that really the forgiveness piece, once you have the money, then the forgiveness piece, you go back to your lender for that process. So start out maybe talking about that, and then I'll turn it over to you.
I did have one question before you jump in,
Okay, sure.
Glenn. Was there a particular reason why the percentage was decreased from 75% to 60% as it relates to payroll?
I'm not real sure why that. Again, that's based on feedback saying, we know we want to bring people or keep people at work, right? So, but I think it was just the pressure on the fact that this thing has lasted a lot longer than we thought, and then rent and utilities and all those things continue to pile up. So yeah, I think that was part of it. You got any comments?
The other thing too that we were seeing is we saw a lot of clients who basically said, I can't bring people back because I'm still required to be shuttered. Right. And so while I got the PPP loan, we thought we were going to be able to open up. We can't. So what am I going to do? I've got a finite number of days or months or weeks, as it turned out, originally 8 weeks, in which to spend that money. And I just can't bring people back because the law doesn't allow me to. My jurisdiction says I have to remain closed. So they were looking for some flexibility. So that's where the tripling of that covered period, that a period of time in which you could spend that money, and then the reduction of the requirement to spend on payroll came as part of that Flexibility Act. So that's really what, Ariel, that's really what they were trying to accomplish. And an aptly named piece of legislation, by the way. I think it added great flexibility to the PPP program. So we're at that forgiveness stage right now. And as we were talking in lead up to this, I said, this is just like when I do something that makes my wife angry with me. In order for me to get forgiveness, I have to ask for it. So you do have to apply for forgiveness. So you'll do that either through your lender, or if your lender has chosen to participate in the SBA direct forgiveness portal, you can do it through that portal. But that will be at the discretion of your lender. You can use that direct forgiveness portal if your loans are less than $150,000. Now, the good news is 93% of outstanding PPP loans fall into that category. This number, I think the 6.5 million has been carved down to maybe about 6 to maybe 5.5 million loans remaining to be forgiven. So we're making some progress on going through the forgiveness process. And a lot of you may be facing payments if in fact you don't get your forgiveness applications in. There's two things that the SBA has developed. I've already talked a little bit about that direct forgiveness portal. What they've also included another feature called the COVID revenue reduction score. We'll refer to that as a score going forward. And that's for PPP second draw, or we could refer to them as PPP2 loans. Now, for lenders that choose to opt into the SBA direct forgiveness portal, this eliminated the need for some of the smaller lenders. And a lot of these smaller lenders really participated, I think, in the second round of funding or this year. And so this actually eliminated the need for them to create their own portal or their own process. So SBA would allow borrowers to submit directly through the SBA portal. It's an unfortunate, a little bit of an unfortunate communication, I think, on that direct forgiveness. That information still has to go to the lender. Now, SBA will collect that information through the portal in a standard format, send it to the lender. The lender will be able to come in through the lender side of that portal, if you will, and then they will be able to review what you submit. But again, this is for lenders that opt in. Now, I just checked just before we went, before the webinar started today, there's 1,276 lenders. That's 1,276 lenders who have opted into the SBA portal. So that's good. Unfortunately, that's less than 25% of the lenders. There was 5,467 lenders that participated in PPP. So it's highly likely that your lender, it's likely that your lender may not be participating. You will need to take the lead from your lender. Your lender should be communicating with you. I think Kino will be able to reinforce that, how Ameris is communicating with their lender or their borrowers. But the lender will let you know whether they're going to provide their own process, they're going to provide their own portal, or if they've opted into the SBA direct forgiveness portal. But it never relieves the lender of the obligation or requirement to review what you submit before then authorizing SBA or asking SBA for forgiveness on your behalf.
Okay.
So next. Now, if your loan is less than is greater than $150,000, regardless of whether your lender has opted in, you're still going to have to go directly to your lender. So again, that $150,000 is a key number. Obviously, if your lender has their own portal, you'll have to use that or their own process. You have an option if you don't agree with the assessment that's being done on the forgiveness, that you could go directly in a provide direct forgiveness application. So if you don't agree with the assessment that the SBA portal does as far as how much of your loan should be forgiven, you have an option to go directly to your portal. And so if there's any other reason that there might be a platform might reject your application, maybe there's information you provided that was incorrect, could have been an ownership change, something like that, that somehow the portal says, hey, your loan, what you're providing me as far as information about your loan is not accurate, then you'd be able to still go to your lender. So you're not constrained by the direct forgiveness portal. If your lender opts in, you're enabled by it, but you still have the ability to go to your lender directly. So what you'll need to do is you need to communicate with your lender. And again, your lender should be reaching out to you whether they've opted in or not, or whether they have a different process in place. So take your lead from your lender. They're the ones that are really going to ultimately be responsible for processing this forgiveness request.
Okay, so just kind of again, so $150,000 or less, you can use the direct SBA.
That's right. The first criteria is your loan needs to be $150,000 or less. That would qualify you potentially to use the portal. The second gate is going to be your lender would have had to opt in to use that. And like I said, about a little bit less than 25% of lenders have taken advantage of that. Now, that doesn't mean that there's not going to be a portal out there. It just means the larger banks particularly, and I think Keena told us that Ameris has their own portal that they've built. So there's been some confusion out there in the press about, oh, if you're not opting into the SBA portal, you're not taking forgiveness applications. That's not accurate. You're probably going to go through a lender's portal, not through the SBA provided one. So we really kind of wanted to disabuse people of the notion that if you're not in the SBA portal, you're not going to get your loan forgiveness. You surely are. I can tell you this, and Jeff can probably amplify this. I don't know of a lender that wants to have a 1% PPP loan on their books for 2 to 5 years. SBA wants to enable forgiveness for as many and potentially all of PPP loans. And we as SBDC consultants want our clients to get full forgiveness as well. So everybody is in agreement on what we want to have as the end outcome is the loan forgiveness. We're really just talking about the process about going forward on the application side.
Here, one other comment too is we did have a lot of online lenders participate in the deployment of the funds, and so a lot of those folks needed a mechanism to allow the borrowers who are all over the country to come straight to the SBA for the forgiveness. So that accomplished that too. So
yeah, that direct application portal really filled a need out there for those smaller lenders who were pretty active actually in that second round of financing, I believe.
Okay, and just for clarity, and I don't know if we're going to get to that. What reason why would the application, I guess, be rejected, or their request for forgiveness be rejected? I know you're saying identity or change of ownership. Are there other reasons?
Jeff might be able to speak to that. I haven't heard too much about. I've heard that the portal is actually pretty smooth, operates pretty smoothly. It would largely be if you keyed in some information in the portal that just did not sync up with the information the SBA had about your loan.
Or we've had situations where the owner passes. So those are situations where either someone has to stand instead and do the paperwork, keep the business a going concern, or either there might be some partial forgiveness in that scenario, but
yeah,
it's been pretty smooth.
Yeah, and keep in mind there are 11.5 million PPP loans out there. So this is a fairly heavy lift by not only the banking industry, but particularly SBA. SBA is going to have to act on 11.5 billion loan forgiveness requests. So it's a pretty daunting task. So so there may be some things that the data just doesn't match. But again, there's a remedy for that. So rest assured there'll be an opportunity for you to ask for some reconsideration if in fact you don't get the forgiveness level that you had anticipated.
Okay.
Now I want to talk about this revenue reduction score. There were 2 rounds of finance, or 2 rounds of PPP. First one last year came out of the CARES Act, and then there was a second one that came out of the ARPA, I believe. The act was passed on December 27th. It was a renewal of the PPP. It was a second draw, or we referred to it as PPP2. And one of the requirements of that second draw was you had to have 1 quarter in 2020 that had at least a 25% revenue reduction when compared to the same corresponding quarter in the previous year. So I'll give you an example. If your second quarter of 2020 had a 25% reduction over second quarter of 2019, then you qualified for a second draw of PPP. In other words, you had not recovered quickly. And so therefore the understanding of the belief was you needed some additional relief with your payroll. That would qualify you for a PPP2 loan. Now, if you were under $150,000, when you applied for PPP2, all you had to do was attest to the fact that you had that. You didn't have to provide the documentation. Now you do. When you go to forgiveness, if you haven't already filed your documentation that you had that 25% reduction, you've now got to file that. So that's one of the requirements of getting forgiveness for PPP2 or second draw loans. Now, that's not what people are not facing the deadlines on PPP2 loans yet, but that time will be coming too, probably later this year or early next. So to streamline that process with recognition of the fact that a lot of these loans, again, under $150,000, what the SBA did is came up with this COVID revenue reduction score, what they're calling the score. So for those second draw loans, they're looking at your NAICS or your NAICS code, your North American Industry Classification System code. They're looking at your geography, and based on those two factors, they're applying a score to you as a business in that area, and say you likely had a 25% reduction, and then you can rely on that score as your 25%, as your validation of your 25% reduction. So if you go through the SBA portal, that will be applied automatically. If you're going through your bank's provided portal, they may or may not be using that score. I think Tina said, we had a little discussion before that Ameris was using that score. And so if that score comes up and says, hey, based on your industry code, where you're located, you probably had a 25% reduction in revenue. You don't need to provide any further documentation. So again, great simplification of the process for forgiveness for second draw loans. Now, all SBA, all PPP2 loans are going to be scored, regardless of whether your lender opted into the platform or not. So there will be a score. It'll just be a decision on whether your lender uses that score or not. So our recommendation is, see what that score is, see if they're using the score, and then depending on what your score is, we go to the next slide. You'll see that there's a remedy if the score doesn't give you that, if that doesn't validate your revenue reduction. You can actually go in and submit documentation. Now, here's a couple of things you to remember. If you provide that documentation to the lender must rely on that. They can no longer rely on your score. So once you put documentation out to your lender, that's why it's really pretty important to find out whether the score is being utilized, and then make certain that and see if you qualify. If you qualify, you can take safe harbor behind that score that you're going to have the forgiveness, you're going to be able to get full forgiveness on your loan. You've qualified for the reduction. But if you've already provided that information to the lender, then the lender is required to look at that documentation. So that's an important distinction to use. The other thing is, I think we go to the next slide, Ariel. Well, if the score does not validate your revenue reduction, in other words, you know that you had a 25% reduction, you got the documentation to prove it, you go into the portal or your bank's portal, you get a score back that says, you don't qualify, you don't have a score that qualifies you, you're not dead in the water. You now just basically provide that documentation. So again, the score structure here, the score tool is intended to simplify for those people that can qualify and get them onto the forgiveness platform more quickly. It does not eliminate any flexibility you have. It does not eliminate any options you have for going back in and providing that documentation. And then once you do that, the lender can use that in their determination. But again, Jeff mentioned that, I think just as he introduced me, I want to reiterate, it is the lender's obligation to submit that forgiveness back to SBA. So whether you come in through the SBA portal or you come in through the lender's portal, the lender has a requirement to review that documentation, or that submittal, and then send it on to the SBA for forgiveness. So the lender is not being cut out of this forgiveness process. They're just being given an on-ramp in the case of the SBA direct portal.
So Glenn, let me ask you this. So we're looking at the NAICS code in real time, or is this a snapshot from 6 months ago, 3 months ago? How is that pulled? That's my first question. The second question is, why wouldn't a lender use, and maybe Keena needs to jump in here as well. Why wouldn't they use this COVID revenue reduction score?
Let me see. Let me answer those two questions. One is the score was developed by a third party that SBA worked with. So that that score and geography combination is already baked into the equation. That is a third party has gone in to determine that score. So what they'll do is they'll look at where you're located and they'll look at your NAICS code that you would have provided when you got the loan. And they're going to say, okay, you qualify or don't qualify. You have a score that automatically qualifies you because of the industry segment you're in and where you're located, that you had a 25% revenue reduction. And so that's a very binary thing. You're either going to qualify or you're not going to. You're going to get a qualifying score or not have a qualifying score. Why a lender wouldn't use it, I don't know why. It simplifies the process and eliminates some paperwork that you'd have to submit. That being said, as you've read my bio, I've got some experience in software services. They could have, this portal could have been built, a lot of these portals have been open for months. The private portals or subcontracted portals have been open for months before the score existed. And it may be difficult for them to go back in and do the programming to be able to incorporate that score in. I could see that being a limiting factor, but absent that, I would, if I was a lender, I'd sure like to rely on that score. It's going to simplify the amount of work my borrowers have to supply to me. It simplifies my application processes, it simplifies my ability to go and get forgiveness for my client.
So Ariel, I can jump in and kind of bring a little more color to that. So as Glenn mentioned, our portal, particularly at Ameris, was built at the beginning of this year. So we're not currently participating in direct apply because we've already had that process in place. So it would be very cumbersome and probably add a little more confusion to do both, if you will, because we've been actively sending out invitations to apply after our borrower's cover period has ended. And then all the while, so we didn't want to add to the confusion. And then there's a cost there to try to integrate those systems. Our processes were already in place for a year now. And so that's the reason why. But I will say this, the lender, we're willing to do everything that we can to get these loans forgiven. I think that there is a misunderstanding that the lender may not be on board with helping you get forgiveness, and that is certainly not the case. And so whenever we can, we've even developed some manual processes to aid us as the SBA comes out with new tools and to aid in everyone's ability to get forgiven. We may, if we cannot integrate it into our portal, then we come up and develop a more manual process. So internally, we're doing everything that we can to get these loans forgiven. It is all of our goal, SBA, SBDC, all of the lenders, to get these loans forgiven and forgiven in a timely manner. No one wants to have to start paying on these, and definitely the lenders don't want to have to show any past dues or on their books, and so it is definitely our goal to help everyone do that.
Okay.
Can I chime in too? This is Jeff. Just to share another point Keena made. I mean, we were kind of late to the party with the direct forgiveness. So yeah, the banks had already, being the good partners, especially here in Georgia, that they were already proactive. And again, as she just said, they want to, the goal is to get these things forgiven for you, the client, and for them. But we just wanted to give some tools to assist in that. But yeah, I'll admit we were a little bit late in getting that done, but it's there now. But
yeah, and I think too, just having watched it and working with clients, that a lot of the lenders who are going to take advantage of the SBA direct portal are going to be those people who probably participated in the second round. I think this is probably going to be it's going to be more valuable when the CDFIs and some of the lenders there was a big focus on trying to make certain that PPP money got out to smaller, disadvantaged businesses. And they brought more and more lenders into the fold in that second round, the online lenders that Jeff spoke about. But they were not normally taking SBA loans. So they had to build their own application process and then had to build their own forgiveness process. So I really think that the value of this SBA portal is going to probably find itself in these PPP2 loan forgiveness arena. That's where the big volume, I think a large volume could be enabled by that, because a lot of those people went online. And if you recall, there was a period of time where we actually paused PPP loans for a while for larger banks and only opened them up to smaller banks to try to get more and more small businesses in. That happened. It was successful. It got smaller lenders in, but those are ones who were probably more in need of the SBA portal, forgiveness portal, than the large banks, than the Ameris or the large ones that we see that are national or regional or super regional.
Right.
All right. Good, guys. Awesome.
So regardless of whether your lender opts in or not, again, just to reiterate, if your score doesn't get you the desired result, any documentation you provide trumps everything. It overrides the score. Now this also works in reverse. If you somehow provided documentation to the lender that shows you did not have a 25% reduction, the lender is going to have to rely on the documentation you sent. So it is incumbent upon you, if you go that documentation route, to make certain you go about that documentation accurately. And this is where I'll do a little advertisement for resource partners like SBDC is reach out to us. We can help you with that. We can help you work through those calculations. Your lender will probably help you, but we can do that as well. As Jeff said, our services aren't free, they're no cost. I know it sounds like a distinction without a difference, but there is. We actually are compensated individuals. We're just funded, through grant funding, but we do provide those consulting services. And so reach out to us. That's what we're here for. That's why SBA provides the funding to us as resource partners to assist small businesses in being more successful in this particular instance, getting forgiveness. The other thing is, if the lender knows, has information about you as a borrower, that you were not eligible for a PPP loan, it's their obligation to deny forgiveness and to report that back to the SBA. So the lender has an obligation, a fiduciary duty, to make certain that the information that collected by the borrower or provided by the borrower is accurate. Now, if you all remember, when you applied for your PPP loan, there was an attestation requirement there that said, everything I put in here is true and accurate as far as I know. Now, I know that there was money flying around and people were putting numbers in, and you might have made a mistake. I've got some clients who did. They made a mistake. They included 1099 employees when they shouldn't have. But they're not going to get forgiveness for that, and the result of that is going to be a loan. Nobody's going to go to jail for an honest mistake. You just basically say, hey, my bad, we made a mistake. Lenders are looking at that. So if you're submitting documentation now and it's not accurate and it isn't qualified, it's their responsibility to say that's not going to get forgiveness. I've got a few clients that are going to have a little residual PPP loan out there. It's going to be 1% for 2 to 5 years. Not going to be that bad, but that may happen. And so don't fear the forgiveness process, but you do need to provide accurate information, and the lender needs to is going to require that you provide that to them. So that obligation has not been relieved, regardless of the size of your loan. That goes down to a $5,000 PPP loan. You needed to be qualified and spend it on the qualified area. The vast majority of people are going to meet that requirement. So again, do not be concerned about whether that's going to come back to get you. And again, to amplify what Keena said, everybody has the same end game in mind here: loan forgiveness, period. No bank wants a 1% loan on their books for 5 years. SBA doesn't want to have to be dealing with that paperwork for 5 years. We want our clients get loan forgiveness. Everybody's got the same objective: get loan forgiveness. And so they're going to take every option they can within the bounds of the law to get you loan forgiveness.
So just for clarity, so is it possible that you're forgiving portions of the loan and not the entire? Because that's what I'm hearing.
Yeah, it is. I've got a few clients that are going to be in that situation. And, they just made a mistake when they applied. They said, oh, I thought I could include that in. And it's like, no, you can't. And so when you provide that documentation, that may come back. They may come back and say, yeah, you got a bigger loan than you should have gotten. You didn't have as big. You qualified for the loan based on your payroll. So if you included things like 1099 compensation that you shouldn't have included, and that gets caught at the forgiveness stage, then they're going to basically say, you know, you shouldn't have got a $10,000 loan. You should have got an $8,000 loan. Look, you've used your $8,000 properly, but that other $2,000 is going to be a loan. And I think SBA has already ruled on that. If there's going to be a residual, it results in a loan. It doesn't result in a balloon payment or anything like that. So, you know, you're not going to have a sudden call on that loan. You're just going to have to pay it off over time. And again, a 1% interest loan is a pretty nice result if that's what you end up with. So there will be some people like that. Still, I think the forgiveness numbers are well into the 90% range. I haven't looked at that for a while, but it's a very, very high percentage of loans are being forgiven.
Yeah, and if Ariel, if I could add to that, if you are a borrower and you feel as though, some employees had to leave, I was supposed to spend this amount, I wasn't able to. If you have any questions, go to your lender, because more often than not, we're able to look at everything that you have and still get you forgiven for the full amount. Just case in point, you know, most borrowers, they had lease payments, they had utilities, they had other items that can be combined with what they used with payroll. If they had used at least that 60% there, then we're able to, you know, help them get forgiven for the full loan amount. So please go to your lender, go to your provider, speak with them. If you feel as though that you don't have adequate documentation, we can help this, you know, you look at everything that you have, and you may be surprised that you do have enough things to get you that forgiveness. So
can we talk about what that documentation is? We've said that probably about 50 times. Let's get some examples of documentation, because we do deal with the technical side of things. So we want to know what exactly are you looking for?
So in our case, we're looking at proof of payroll distribution within that covered period. So that can be your 941s for those quarters, your payroll registers. A lot of people use payroll providers like ADP and Paychecks. They even have the tools. If you can just call your payroll provider and say, hey, I got a PPP loan, I want to apply for forgiveness. Please help me do that. They have it already ready. They can just email it to you most times, and you can submit that. When you're talking about utilities, that's a no-brainer. Lease payments, we will look at canceled checks within that covered period to show that you've made those payments there. So it's so many different ways that you can provide it. There are a lot of Schedule C borrowers. We want to see that you properly wrote those checks out. So again, we're willing to look at everything to help you get forgiven. But just again, speak to your lender and find out what can be used.
So when you're looking at a Schedule C or a sole proprietor, let's just use a sole proprietor, and they are now, were they given, sole proprietors were given PPP, correct?
Yes.
Yep.
Correct.
And so when you're looking at how they would have kept themselves, what are you looking for as far as documentation if they're keeping themselves on payroll, for lack of a way of saying it, but they're not using ADP, they're not using Paychecks, they're not using the formal payroll platform?
So the most common that we're seeing is they will write checks basically to themselves. And we know that they're paying themselves. We have a lot of real estate agents that will, and what we've just said, hey, follow your regular payroll cadence. So if you've got closings, you once a month, we're just telling them, just have it, mirror what your cadence is and your operations. We'll look at your P&Ls. We'll look at your expenses. We look at, we'll look at all of those things. Hey, show us in this covered period how you exhausted those proceeds. And then, give us what you have. We'll help you look at, whatever you have to see if we can get you forgiven. So, but what we are seeing most common is that and we tell them at origination, they say, how do I show, when it's time to get this forgiven? They ask us at the beginning. A lot of times we provided that education at the beginning of origination. Write the check into yourself, in the for line or the memo line, just write payroll. That way you can, you can be covered. It's distinctive and on record, and you won't have problems there. So
Yeah,
I hope that helps.
We had advised early on, again, if you didn't do this, then the water's under the bridge, right? But we had advised people to take their PPP funds and actually put them in a separate account, business account, just create a little parallel account. That way, then you could continue to just draw from that as you needed to. If you paid a utility bill, draw from it. If you paid a rent bill, draw from it. You paid payroll, draw from it. So you had an audit trail, if you will. But, if you didn't do that because you're a sole proprietor, I understand that, you might say, that's kind of crazy. I'm the only person. I can keep track of that. It's probably in your bank register. Go pull your banking documents back from when you got your loan. That's when your covered period started. It's the date that money hits your account. That's when your covered period. And then just go 24 weeks beyond that. So it's about 6 months, just 2 weeks short of 6 months. And get your bank registers from there and go through. And I would guess you could go through and highlight them. And, this is a draw for me for my payroll. This was a utility I paid. It's going to be in that bank register. And that would be acceptable documentation. Is that correct, Tina?
That is correct. That is correct.
Yeah, so it's not super onerous. The other is if you use something like QuickBooks Online or one of the other online accounting tools, they have those things built into them, I believe.
Yes.
I know QuickBooks does. QuickBooks Online does, but I think some of the other ones, maybe a Zoho or some of those other ones that do those types of things. I think Zoho provides payroll, but you can use most of them have built that platform in. It's just not everybody, but a high percentage of people are getting PPP loans that they built that capability in.
Okay. All right. Awesome.
So we thought we'd talk a little bit about what's left out there. And part of it is because PPP is, we're in the forgiveness phase. And there are no additional PPP funds. We do not anticipate that Congress would provide any additional PPP funding. We think that phenomenon or that program is basically been put to bed as far as funding size goes, now into the forgiveness side. The one program that is still out there, that is active, that is fairly robust and available to you is EIDL. Now, this was actually the very first program that was kicked off before the CARES Act actually passed. And this is a economic injury disaster loan. That's what EIDL stands for. That's what the acronym is about. It is a loan. It is not forgivable. And before anybody asks the question, no, we do not anticipate that we'll ever be forgiven. We get those questions a lot. It's a straight up loan. Now, here's the nice thing about it. It's a 30-year term at 3.75% if you're a public, you're a private entity. If you're a nonprofit, it's a 2.75% interest rate. Now, I'm going to assume that Kina is not real thrilled about writing 30-year, 3.75% commercial loans out there. So this is a loan that you're not likely to get through the lending through our lending partners or friends, just because of the terms. The terms are very, very, very favorable to you. The other thing is, if you get the loan, if you get a new loan this year, if you've never gotten an EIDL loan before, you can get 24. You automatically get a 24-month deferral. The interest will accrue, but you're going to get 24 months of accrual. So really, you're going to pay it back in 28 years. You have 2 years of no payments. Interest is going to accrue, but again, at 3.75%, fairly modest amount of money. This loan originally came out as a working capital loan. So it was going to go towards any of your operating expenses. So anything you would have paid for with PPP funds, plus things like inventory and repairs and things that weren't part of PPP. PPP was to go for your payroll. EIDL was to cover your working capital, so general operating expenses. Effective yesterday, when the SBA issued what they call an interim final rule, or IFR, was published in the Federal Register, they've now liberalized some of the use of funds of those EIDL loans. So whether you have one or you're about to get one or you're contemplating getting one, you can now use those idle funds to actually start repaying your other financial obligations, so your other debt instruments. So you can pay your payments, principal and interest payments on any debt instrument you had out there. That was not permitted before. I think you could pay interest only, but you couldn't pay principal off with idle. You now can. Furthermore, you can prepay a commercial loan. So if you've got a commercial loan out there that's got either a balloon payment coming up or just doesn't have as favorable financing terms as a 3.75% interest rate, you could use the idle fund to basically prepay that or pay that off. This is a big change in the idle program. I don't think that has ever been done for idle. Idle's been around for a long time. Idle loans are going to be made to those people in New Orleans who are recovering from the flood, or the people in up in the Northeast that are recovering from floods. The COVID idle has got these special terms associated with it. They're going to raise the limit. The limit was originally 150,000. They raised it to 500,000 back in April. It's now going to go up to $2 million. You can get additional funds out of your idle loan if you hit one of those caps previously. Calculation for this is real simple. It's based on your gross margin. So in the middle of that qualification, you take your total revenue minus your cost of goods sold. That gets you to your gross margin, and your max loan amount will be based on that. They'll take that difference, that gross margin that you've got, times 2 now to calculate the maximum loan. Now, previously, before April, that loan, the calculation was based on dividing by 2. So they basically gave you 6 months of your gross margin in the form of a loan for your disaster loan. They're now saying, because the pandemic has lasted much longer than we anticipated, they're going to give you 2 years, 24 months. So if you got an idle loan last year, it would have been based on that 6 month dividing by 2. You can go back in and request an increase. And let's say you got $100,000 last year. By definition, you're probably going to qualify for $400,000 total, which means you're going to get another $300,000 net in an idle increase loan. Again, this is a loan that's 3.75%, 30-year loan, pretty friendly for you. And with this added feature of being able to use it to pay off some of your debt and actually refinance some of your non-federal held. Now, there is a distinction here. If there's debt owed to the federal government, so to the SBA or SBIC or something that's a federal loan that you got, you can pay principal and interest, but you cannot pay it off with this. It really is basically saying you can't take one federal debt and just refinance another federal debt. Now they're letting you refinance commercial debt. That may not make bankers like Keena happy. I don't know, but as a consultant to our clients, I would recommend you look at this pretty closely. And again, your only qualification is your gross revenue in 2019. Now, what happens if you didn't have gross revenue in 2019? By definition, you didn't have a disaster. You weren't impacted by COVID because you weren't in business before COVID hit. COVID hit largely around February, March of last year. So you're not going to qualify. It's going to be based on your 2019 gross revenue minus cost of goods sold. The other thing they've done is they have applied the affiliation rules that were in the PPP and RRF programs so that you can actually get $2 million per location up to $10 million. So if you had multiple locations that might qualify for an idle loan, you could actually aggregate that past that $2 million. The other thing they've done is they've carved out certain North American Industry Classification Systems code. We're going to go to the restaurant sector first. That's one that has been identified. And what they've done is they've lifted that. Generally speaking, you could not qualify for idle if you had more than 500 employees. You were a very large company. However, what they've now done is through this affiliation rule change, they've applied that 500 employee limit to a location. So you could have 1,000, 2,000 employees, as long as it wasn't 500 at one location, you can now qualify for this loan. So they've tried to expand the availability of this program to certain businesses that were hardest hit. The list of the NAICS codes are going to be out there. I think there's going to be a press release probably on this today. It's been published in the Federal Register, so it is out there in the public. If you reach out to one of us, we can get you whether that qualifies or not, but that's a larger business. We may not have anybody on this call here today where that would necessarily apply to. Now,
that is late breaking news, and again, just yesterday. So there will be a press release today, and then some more details coming out on that. So there's some other stipulations too. But in the interest of time, should we think about wrapping it up, or
Yeah. Well, let me ask you this as far as idle is concerned. So, what I want to know is, it seemed like there was a big push to go ahead and get those funds out August, and then it seemed to be slowing down again. So, can you talk a little bit about that? What I thought was going to happen, where they were going to try to get some things out before the new fiscal year starts for the federal side. Is that not a factor with this?
So there is plenty of money still available, somewhere around $200 billion. The time frame goes through December, so it's not tied to the fiscal year end coming up. But one thing I know, and our phones ring off the hook, there are some hiccups along the way. This is the only direct lending that we do at SBA, and that's handled in another world, if you will. And so we have limited access in the district offices to what's going on. We're not even privy to the entire underwriting process, but that I know that's still frustrating for people, and it's confusing for the bankers, and it's confusing for our borrowers as well. But there's work. They're working on that. There was a huge backlog of applications that's being worked through, and then it's just a slow roll. But they're working on improvements as we speak. So
Okay.
and if I can go to bat for SBA here a little bit, is that if we look back, kind of like to explain what was in place and what's in place today and why things are as they are, so people can understand it. There's no intent to not process those loans as fast as they possibly can. But if we go back to last year, early 2020, when idle loans started, I think it was in March of last year. Is that correct, Jeff? Yeah, March. When you applied for your idle loan, you basically put in those numbers. You put in your gross revenue, you put in your cost of goods sold, and they calculated how much you qualified for, and they sent you the money. And they did that quickly. And they were checking a couple of things about about your business. But you provided that information to them in good faith. They had no way to audit that because in March of last year, nobody had filed their 2019 taxes. And if you recall last year, the tax filing date was moved out to July 17th, I believe. So there was no way that SBA could check the numbers that you provided. Now there is an audit. It is called your 2019 tax return. Everybody, again, when you started applying last year, nobody had filed. Almost everybody should have filed by now, unless you have some exception. So they want to see what your 2019 taxes are. They're going to do a checks and balance on it. They have an obligation to do that. It's their fiduciary duty to do that. They are the caretakers of federal tax dollars. And so they're going to go and do that. The Office of Inspector General watches over their shoulder, provides them some guidance, critiques what they do. And they got some criticism last year on the idle loans. I think maybe not necessarily justified given what we were going through, but they're taking seriously their fiduciary duty. And I think that's what we've seen. Why those idle funds have not flowed as quickly as they did last year is now they're going back and checking. Now, what they're finding is some people made mistakes.
That's the 4506T that's being
That's
recorded.
right.
Yeah.
Yeah, and let's also point out that there is a special 4506T form. You have to have the one that says disaster at the top, and you can get that link off the SBA website. And are you going to send this presentation deck out to people?
Oh yeah. We put it up on our YouTube.
I think we put a link in there.
So
if not, reach out to us. We can get that to you. We can provide that link to you.
One other thing to note is we go out and extract the information from the IRS. And of course, the IRS is backed up. So it's just the kind of the perfect storm, if you will, because we need the information, they're backed up, they're shorthanded, and then it just mushrooms from there. So, but again, the agency's aware of that. We're working on solutions every day, and it's getting incrementally better. Hopefully folks will see that.
And because of the checks and balances, we do deal with a lot of clients. We may have some people on this webinar today who have experienced this, where they had applied for an increase or maybe applied for EIDL the first time and were rejected because information didn't quite sync. That doesn't mean that you're dead in the water. There's a the reconsideration process,
Right.
And you can go back in. So don't give up. Sometimes there's been glitches in the system. Again, I think it was a backlog of 600,000 loan
Right.
requests. Is that right, Jeff?
Yep.
And they're working through that. They're now processing them at an order of magnitude faster than they were about a month ago. So they're getting through them quicker. Now, I've had some clients say, well, yeah, they're doing that by rejecting my application. It's like, well, you probably put something in there incorrectly. Let's just go through your documents. Let's make certain we got the right numbers in the right place. Let's go see what was going on. I've got one client, Jeff and I talk, well, almost daily, right, Jeff? I think we talk about something that came up, hey, I put the wrong address in, I put my home address, not my business address. And when I went to the IRS said that company doesn't exist at that address. You're gonna have to fix that. And so the other thing about that 4506T, if you take two things away from this on that, one is make certain you get the special disaster application form. And secondly is look at your tax return and make certain what you put on your 4506T matches your tax return information exactly. Don't transpose zip codes. Don't put the wrong apartment number in. Don't put the wrong street number in, because that will get you kicked out. The IRS is very studious about making certain that what you're requesting transcripts for is what they've got in the filing, and that's been a big hang up there. So be very, very careful about that. Pull your tax returns out and look at it, copy it verbatim into that 4506T.
Yeah.
Let me ask you a question, Jeff, and this is for you. Has the IRS not developed a portal specifically as it relates to SBA to help move things a little bit quicker? You guys.
So there in technical terms, there was a memorandum of understanding a long time ago. Then we tried to say, okay, we don't need all of the information. We just need these 3 data points. Well, that caused another memorandum. I mean, they're working on a mechanism for us to just go in and extract the data fields that we need. I'm not privy to what the process is or where we are with that, but and as far as it's a portal or how we go in and get the information, I'm not sure of, but I know they're working on that, so then we can just get the information, as Glenn said, compare it to what you said, and we're just trying to prove that there was an impact, a negative impact because of the virus. Yeah. And that's the definition of the disaster funding legislation. So. Okay.
I know we have, and some of our ladies have been in the office, specifically getting help with EIDL. I know there was something sent out last week, I believe, where they were requesting a P022, but had not given out the form. Do you know if we've gotten that taken care of?
I think it is. It's out there. So. Yeah, sometimes the operations get ahead of the information that's available, but yeah, I think everything's out there now. And the 2202 is basically the statement of liabilities, and the reason for that form is because, again, there's no algorithm decisioning these. It's a cash flow. It is a loan. It's not forgivable. So we have to make sure, or relatively sure, that the business can make the payment back. I see Keena nodding her head. I mean, we're cash flow lenders too. You got to be somewhat, sure that the borrower can pay the payment back or has the ability. And then anyway, that's just part of the process. So.
Okay. All right.
It's really underwriting. It's really underwriting of the loan. Yeah, that's going on.
So
able to service the debt.
It won't be forgivable, is what you're thinking. At least not from what you're seeing. Congress could change that though.
They could. I find that highly, well, who knows? Who knows what could happen here?
Right.
It would literally and figuratively take an act of Congress. So I'll just leave it at that. So we'll see what comes out of the upcoming funding. We have heard rumors of some additional funding that might be reappropriated for, the RRF, that Restaurant Revitalization Fund, was grossly underfunded. We hear about that all the time. We know that would mess with some of the legal action that was going on there and injunctions that were filed, and be nice if they could do something with that. I think there's I know there's a desire to do that. I know the mind is willing. If the body's able, it will happen. We'll see what comes out of there. We hear some rumors about all of that. Well, I tell you, Jeff said I do read the legislation when it comes out. I do read it several times, and I do that because I don't do magazine articles, magazine reports, blogs, Twitter accounts, or anything like that about it. I just say, let's read the document when it comes out, then we'll know what the intent was in the legislation. And there were things in that CARES Act that needed to get fixed. That's why the PPP Flexibility Act was passed. Is they put it out there in good faith based on what they thought, and then it got out there and people like, you didn't think about this, you didn't think about that, you didn't think about this. And they're like, you're right, let's go back and fix some of those things. So
Right.
So there was action that was done in Congress. It's pretty easy to bash the folks inside of the Beltway, but they had good intentions, I think, with all of the legislation that's been out there. And I think those good intentions will continue to follow through. And no, I'm not totally naive. I understand there's politics up there and all of that stuff, but they're, particularly when it comes to small businesses, there's not a lot of partisanship over trying to help small businesses. There's a lot of bipartisanship on trying to help small businesses. So I kind of count on that, winning the day, I guess, for small businesses.
Absolutely. Well, we definitely appreciate you guys. Keena, I just want to make sure, I know you guys are what you consider a big bank. Are there any other options, lending options that you guys have available for small businesses? I know you guys aren't really considered what you would be a micro lender, but I just wanted to make sure you provided that information if you had anything.
Yes, I'm glad you asked. So we have an array of products. We are a regional community bank. So we're relationship driven. So we do take the time to make sure, again, that we look at everything that you have, educate you, and then there's products that we have where if you are a startup, that we can look at you as a guarantor, look at you personally to assist in getting some business credit. So we don't have a centralized, systematic, hard line in the sand. We do have local people that market presidents and things of that nature we can bring in to, make a little more local decisions. They understand the market that we're in. They understand the needs of the business owners. And so we do have that capability and flexibility to try to customize the loans to fit your need as a business owner.
Awesome. All right. Well, I'm not seeing any questions, which is very shocking. So if you guys have any questions, we want to go ahead and wrap up. But again, I appreciate all of you all for taking time today to make sure we are armed with the information and the knowledge. I'm going to give everybody a minute to say some last words, and we'll wrap up. Glenn, I'm going to start with you.
Yeah, I'll just say this, that as a small business, just be aware that there's a lot of resources. You've seen 4 different representations of that here on this webinar. There's a lot of resources out there that want you to be successful and want to give you every chance to be successful. We tell people all the time, the bank wants you to be successful. They want to pay, they want to have you, put you in a position where you can pay them back. That's what the bank wants, is their money back, and then they'll lend it out again. And I mean, that's essentially what they do, and they are there. They are there to help you. So don't be afraid to reach out any of the resources that you see out here for small businesses, because we want to see you be successful as well, and we can definitely help you, and we can do it with a high degree of success as well. But you can't get help if you don't ask. Don't be afraid to ask. We're all here to try to help you, and I think everybody would agree with that. I think on this webinar.
Jeff?
Well, that's well said. And being the old banker on the panel before I got to SBA, hey, this is a contact sport. I mean, you talk to your peers, you talk to your colleagues about, what CPA to use or what marketing firm to use. So reach out to these people, anybody you can, for advice. And you can't do everything online. Go see Keena, because it's a relationship-driven business. Come see us at the SBA. There's plenty of interaction with our office, and we're always happy to help.
All right, Keena?
Yeah, I would just concur with you guys too. If you are a business owner, find you a business banker, and once you develop a relationship with that banker, and you trust that banker, use that banker. I know that we're in the world of do-it-yourself, and we have a lot of self-made professionals out there. You go on LinkedIn, you'll find everybody knows a little bit about something, but it's about developing that relationship, developing that trust. And then, once you have that relationship, give them everything you have and everything you don't. Our goal is to assist you in any way that we can, and then to give you the education. Your banker would be able to tell you why you may not qualify at this time for a particular product, but then provide you with that education so you can get those things in order to, be serviced in that manner later on. So, if you're just systematically filling out an app online and you get that declination, and that's the end of the relationship. So it works kind of okay as a individual consumer, but once you're a business owner, we want to help you grow. Find a business banker, and we'll be more than happy to help you be successful. So thank you all.
All right, and thank you guys. So see your lender directly for any PPP forgiveness, or you can go onto the SBA portal and request forgiveness directly. And idle funds are still available quite a bit. 200 billion is what I wrote down. Give SBA time to get to your application and give them some grace in the process. But again, thank you all for joining Southern Crescent Women in Business and SBA, SBDC, and Ameris Bank. Have a great day.
Thank you.
Alrighty, bye-bye.
Thank you.